Bitget Exchange has revealed its plans to delist Token, the digital currency of Token FI, a tokenization platform launched by the team behind Floki. By the way, is the Bitcoin bull driven by genuine institutional inflow? Join me guys as I unravel the mystery behind SBF's admittance of transferring $650 million worth of Robinhood shares acquired last year to his personal custody. If this sounds like something of much interest to you, be sure to check out this new video starting now. Hello and welcome to our channel, where we talk about the latest updates from the world of cryptocurrencies in general. If this is your first time watching one of our videos, we extend a special welcome to you. We invite you to hit the notification bell so you never miss another video. Now, let's dive in. While Bitget listed Token on October 27th, the exchange disclosed it had suspended the trading of the asset on its platform. Full delisting, as announced, will trail a 5-day buyback plan. Bitget's move to delist Token is decisive as the exchange accused Floki of price manipulation. Based on its policies, newly listed tokens go to the innovation zone and are placed under observation for 60 days. The token's performance for this period hinges on different factors, including volume and the team's involvement in the project. According to Bitget, shortly after it launched Token FI, it realized the Floki team placed only $2,000 in liquidity on decentralized exchanges, with accusations of maliciously controlling the initial liquidity. Bitget alleged that from its investigations, the tokenomics surrounding Token are unclear as well as a suspicious vesting schedule. Riding on this, the exchange said its move to delist Token is its way of staying responsible for its users. The exchange hopes to compensate its token holders on Bitget through the buyback plan. Per its announcement, Bitget said it will wrap up the buyback program before November 7th, and the repurchase of Token will be at the highest closing price for the short time it traded on its platform. Bitget noted it will swap Token for USDT and deposit the equivalent of the user's holdings in their accounts. When Floki announced the launch of Token FI last week, it stirred high hopes in the minds of users. The turn of events is, however, a major headwind for members of its community as the delisting comes with bad publicity. In earlier reports, Floki revealed its plans to monitor the unwholesome accumulation of Token with accumulation caps and buy-sell taxes on Uniswap and PancakeSwap where it first listed. Though it remains unclear whether other centralized exchanges will trail Bitget's path, for now, Token has maintained a positive trading stat with its price up 20% to $0.01927. Token's market cap of $18.15 million far outranks the projected market cap at launch pegged by the Floki team at $50,000. Currently, Token's trading volume has jumped 149% to $6.63 million. Floki on the other hand has slipped off from the top 100 it entered last week after a 5.83% plunge to $0.00003483. Well, that's not all. The most prominent cryptocurrency, Bitcoin, is up over 13% in its cumulative one-week performance, settling at $34,679. Expert discussions around the outlook of Bitcoin intensified following the digital asset breaking an over 15-month high last week. In a recent interview on CNBC, Thomas Lee, co-founder of Fundstrat Global Advisors, discussed his bullish outlook on Bitcoin and the factors driving its recent surge in value. When CNBC host Scott Wapner asked if he was still a Bitcoin bull, Lee responded affirmatively, stating, "Yes." Furthermore, he attributed Bitcoin's impressive performance as one of the best-performing asset classes of the year to several vital factors. Lee pointed out that there has been significant institutional buying, with volumes reaching all-time highs. Moreover, he cited that there has been a resurgence of interest from Asian markets, which were previously absent from the Bitcoin scene. The researcher noted that this renewed interest reflects a genuine desire among big money investors to enter the market. Furthermore, Lee highlighted the appeal of Bitcoin as a sound money story, particularly in a climate of concern about the U.S. government. Lee believes this quality has contributed to Bitcoin's rise as a store of value and a hedge against economic uncertainties. Also, Wapner inquired about the role of exchange-traded funds, ETFs, in Bitcoin's growth. Lee acknowledged the importance of ETFs in the crypto space. He argued that their significance may be even greater than many people realize. Specifically, he pointed out that Bitcoin's supply is set to decrease significantly to around 12 million a day after the upcoming Bitcoin halving event. In parallel, Lee theorized that the potential demand for Bitcoin through ETFs could be as high as $100 million daily. Notably, the crypto community fervently awaits the US regulator to greenlight the first Bitcoin spot ETF in the coming months. Interestingly, a recent counterfeit report proclaiming BlackRock's BTC ETF approval caused Bitcoin to break above $30,000 after multiple weeks of passive trading around $26,000. Now to our main focus for the day. What was SBF's reason to have transferred $650 million worth of Robinhood shares acquired last year to his personal custody? Please, do not forget to subscribe to our channel and also hit that notification bell to be the first person to get more updates about the latest happenings in the crypto space. Crypto entrepreneur Sam Bankman-Fried, SBF, resumed his testimony yesterday in the high-stakes trials surrounding the collapse of FTX. It bears mentioning that October 30th was SBF's third day on the stand in the fifth week of his trial. Unlike his previous appearances, yesterday's cross-examination saw intense questioning from the prosecution team, seeking to unravel SBF's role at Alameda Research and FTX. U.S. Assistant Attorney Danielle Sassoon led the prosecution team's cross-examination of SBF. Sassoon questioned SBF about owning $650 million worth of Robinhood shares. Recall that in May 2022, the price of Robinhood shares spiked over 30% after Bankman-Fried purchased $650 million worth of the asset at an average price of $11.52. During the cross-examination, SBF confirmed that he made the decision to buy the Robinhood shares but denied considering calling the online brokerage company to acquire the assets. The attorney also pressed SBF about the rationale behind transferring the $650 million Robinhood shares to his custody. According to SBF, the rationale behind the transfer was not to lay claims to the shares. Furthermore, SBF acknowledged being aware that FTX customers could not access their funds when he tried to take custody of the Robinhood shares. Attorney Sassoon also probed Bankman-Fried about putting FTX customers at risk as Alameda Research tried to settle its debt. The cryptocurrency entrepreneur confirmed directing Alameda Research CEO Caroline Ellison to pay Alameda Research lenders using FTX assets. However, he denied knowing that the decision would put users of FTX at risk. Pressing further, Sassoon quizzes SBF whether he knew that taking money from FTX to pay Alameda Research's debt could create the risk of a hole in the exchange's balance sheet. In response, the crypto entrepreneur answered in the affirmative. Recall that SBF previously claimed he believed it was legal to use FTX customers' funds for Alameda Research's operations. The questioning later turned to spreadsheets, highlighting SBF's knowledge of Alameda Research's inability to pay lenders. Bankman-Fried pointed to the Alt-7 document as an alternative spreadsheet he had seen before. Consequently, the U.S. prosecutor asked whether he remembered receiving an 8-tab spreadsheet from Ellison. Responding, SBF acknowledged that he received multiple tabs from the Alameda CEO. Yesterday's proceeding ended with questions regarding SBF's efforts to replace Alameda with Bahamas-based Modelo Capital, as the crypto entrepreneur answered in the affirmative. It bears mentioning that SBF invested heavily in Modelo to the tune of over $400 million when Alameda was struggling. Modelo, which was founded in 2022, received a whopping $475 million in seed capital from Alameda. Meanwhile, Sassoon indicated plans to continue the cross-examination later today, October 31st, when the court reconvenes. Now, I'd love to hear your thoughts on this in the comments section. Write us anything down here, we are very eager to read you. Always remember that you are an important part of our community. With that, we come to the end of this video. If you enjoyed it, give the video a like and don't forget to subscribe. This really helps me with the YouTube algorithm. Also share this video to as many people as possible. Let's get this news everywhere. See you in a future opportunity to talk about the latest news that concerns us all as a community. Thanks for watching.